Greetings. I'm Mike Begg, SVP and head of BMO's Canadian Commercial Real Estate Finance team. We're honored to take part in the IgniteDigital conference this year, and it's my pleasure to welcome you for what promises to be a very informative session. I think we can all agree this past year has been a time like we've never seen before. Banks entered COVID bracing for deeper impacts in the commercial real estate books, deferring mortgage payments to ease cash flow pressures, monitoring income property rent collections and housing market trends, while continuing to support large development and financing demand by the industry. I'll try not to steal our speaker's thunder, but to say that the commercial real estate segment has done better than expected since last summer would be an understatement. The payment deferral program served their purpose and largely wound down last fall. We have not had any losses or defaults in our commercial real estate loan book that can be attributed to COVID. Availability of capital across the segment is strong. We have a veritable Z or nearly Z-shaped recovery because employment impacts were largely service sector, representing about 4% of GDP. There is pain and ongoing adjustment in retail and office, to be sure, but this is not your parents' or even our own prior commercial real estate recession experience, but a very unique pandemic one where low rates, strong demand, and continuing undersupply trends are driving borrowing and housing market activity. And we expect that to continue through 2022 and beyond. Opening our discussion today will be BMO's senior economist, Sal Guatieri, who will provide an economic update as well as outlook for Canada's housing market. Following Sal's macro perspective, we'll go a little more micro and have a panel discussion that will provide some perspective on the current housing supply and affordability challenges. For that discussion, we are honored to have three of our respected clients join us. First, co-moderating with me is Aleem Dhanani, Managing Director at Bri-mor Developments. He and I are honored to be hosting our two featured guest speakers, Peter Gilgan, founder of Mattamy Homes, and Peter Politis, CEO of Greybrook Realty Partners and partner at Greybrook Capital, whose extensive bios were shared prior to this session. With that, I'll turn it over to you, Sal, for the economic and housing market big picture.
Thanks, Mike. Hi, everyone. So let's start with the economic backdrop before ending with a few thoughts on the housing market. After last year's firestorm, Canada's economy is on the mend, recovering all of the 3 million jobs lost during the shutdowns and nearly returning to pre-virus levels of activity. Despite stumbling in the spring due to pandemic-led restrictions and supply chain disruptions, notably in the auto industry, the economy is set for pretty strong growth in the year ahead due to expansionary fiscal policy, high household savings, and rising energy prices. We expect about 4.5% GDP growth next year, and that's more than double the long-run rate. The unemployment rate has now fallen below 7%. It's less than half its recession peak. And we see it returning to pre-pandemic and four-decade lows of around 5.5% by late next year. Now, our optimism, of course, assumes no material increase in virus cases or sustained further increase in inflation. Well, thankfully, the pandemic is shifting to an endemic, a disease that remains with us and pops up in various regions, but one that we can manage as vaccinations suppress severe illness and lessen the need to return to severe restrictions. Now, inflation is likely now the bigger threat to the expansion. At 4.7% in October, Canada's CPI is rising the fastest in nearly 2 decades. This is partly due to the bounce from last year's price weakness, but also fast rising energy, food, and house prices. And if you can find a new vehicle, you're going to pay through the nose due to the microchip shortage. Many of these sources will exert ongoing pressure in the months ahead before the CPI rate begins to moderate, likely towards 2.5% by late next year, as supply chain disruptions abate and commodity prices cool down. However, inflation could stay much higher for much longer if wage pressures mount and increases are passed on to consumers. So far, wage growth is pretty common in Canada. Bank Canada is finally expressing more concern about inflation, ending its asset purchase program and warning of possible earlier rate hikes. However, it still prefers to remain patient until the unemployment rate falls further. So we're expecting an initial rate hike next summer, followed by a series of quarterly moves that return the current policy rate of near zero to more neutral level of just under 2% by late 2023. And the 10-year Canada rate should also drift higher, though most likely to peak well below typical long-run levels, again, assuming inflation subsides next year. Now, it's that anticipation of higher interest rates that likely explains why the housing market is heating up again, as buyers are rushing in to lock in mortgage rates. Sellers are again in full control across the country, apart from parts of Alberta and Saskatchewan. Prices are reaccelerating, if that's even possible, notably in smaller cities that were stoked by remote workers early in the pandemic. The national benchmark price is up 23% in the past year to October, puts Canada near the top of the global charts. The market will likely remain vibrant for a while, given solid demand fundamentals, including historically low interest rates, solid job growth, families starting millennials, and rebounding immigration. At the same time, we do expect sales and price gains to moderate due to quickly fading affordability across most of the country, notably in Southern Ontario. It's not just a Toronto Vancouver issue anymore, as in 2016. Beside material and labor shortages, affordability is one of the biggest challenges facing the housing market, one that will only worsen if prices continue to vastly outrun family income or if interest rates rise too much. In the GTA, mortgage payments on a typical property now consuming more than half of a typical family's income, and that's at current low interest rates. If interest rates rose a couple percentage points, payments would gobble up about 2/3 of income. Now, while housing remains affordable across most of the country, where mortgage service costs consume about a quarter of income in, say, Ottawa and Montreal, and far less in the prairie provinces, this won't remain the case unless prices cool down fairly soon. The federal government is aiming to address affordability with a number of demand side and supply side policies, such as a 1% annual vacancy tax on non resident owners, first time buyers tax savings account, lower mortgage insurance premiums, and funding to build more affordable units. These measures will help, but only at the margin. And they do run the risk of spurring demand that will only translate into higher prices given the supply challenges. This year, Canada will build the most houses in decades, likely 270,000. But unless we build a lot more, we will continue to see demand eclipse availability, keeping markets tight and pressuring prices higher. The onus really is on municipal governments to ease zoning restrictions, increase densification near major transit hubs, and speed up building approval so that supply can respond faster each time demand gets juiced by the central bank's rate cuts. So just to wrap up, a year of strong economic growth likely lies ahead, and that's going to support the housing market. But too fast rising prices and the risk of too fast rising interest rates could present serious challenge to affordability and the industry. Turn things over to you, Aleem.
Thank you, Sal. Before moving into our panel discussion, I would like to provide some context as to why housing is such an important priority for the Ismaili Muslim community. The objective is for its members to live in safe and secure zones that provide a good quality of life for each family. Throughout its 50 years of settlement in Canada, the community has worked diligently to attain a high level of home ownership in order to give its members a stake in the neighborhood's long-term stability and to build family wealth. However, with rising home prices, affordability is now becoming a significant challenge for millennials and new arrivals, especially in urban settings such as Toronto and Vancouver. Through this panel, we look to dissect some of those challenges and provide perspective on how we can move forward. It is now my privilege to direct the first question to Peter Gilgan. Peter, what is causing the housing crisis, and where do government policies need to change to best alleviate supply and affordability challenges?
Well, what we've really seen in a lot of the urban areas, in particular, for quite some time, is a disconnect between the reality of what the supply is and what local tier governments think it is. And that's also a problem that's existed at the provincial level for about 20 years. So we have deluded ourselves as to what the available supply of land is, and the reality is very different. We've failed to keep up with the demand for housing. We have a complete disconnect between our immigration policies and our housing policies. In addition to that, of course, is the never-ending problem of cycle time in getting land approved for development. It's developers, builders, or like anybody else in business, they want to earn a return on their capital. If my capital or anyone's capital in this business can be invested and harvested in a short period of time, we can charge a much lower price. But if it takes 10, 15, or 20 years to get a project from the acquisition of the land through to housing in home buyers' hands, the cost of that capital has a very, very heavy weighting on the eventual price of the house. So we're seeing both of those issues. We're also seeing a lot of hidden taxation in housing, taxation that people aren't really fully aware of. In a sort of small detached home in some of the areas around Toronto, if you added up all the taxes that are being paid on a new house, they come to about $300,000. And that wasn't the case before. So there's a number of factors that contribute to it.
Thank you, Peter. Peter Politis, same question to you.
Yeah, I mean, hey, thank you everybody for having me. Nice to be here with everybody. I think Peter Gilgan, said everything that was obviously, the case, and we could go on and along those lines for a long time. But to get a little more specific in terms of what roadblocks we're facing, Jennifer Keesmaat, who was the former planner in the head planner of the city of Toronto, came out with a tweet or something publicly a couple of days ago and said, I've moved from the policy world to the development world. And I've learned that over the last few years, many of the sites that we've looked to develop are not financially feasible because of government taxes. That's just a fact. She was sitting in a seat that could have evoked change. So the question is, now that she's not sitting in that seat, I'm not picking on Jennifer because she did a lot of things, and this is just more of an example that the communication between the development world and policy, which is why BUILD exists in many reasons, or at least in the GTA, the lines of communication aren't open enough. I don't know if it's an unwillingness to hear or an inability for the industry to explain the issues, but there's legitimate disconnect in what the city is saying and what the development world is saying. And in order for us to make a margin on capital that's even financeable, forget about just how much money should be made for the risk that's taken. In order for banks to come in and finance these development projects, minimum margins need to be hit. And the government policies, the time to approvals, the immigration policies that are adding to the demand side of the equation, but not the supply side, are all making a problem much larger than it needs to be at every level. So instead of there being release valves across different municipal and federal governments within the industry, it almost seems like at every point there's a different stumbling block that we previously shouldn't have to deal with, or we didn't, let's say, 10 or 15 or 20 years ago, and it's getting harder rather than easier. So I think that all the things that Peter Gilgan said is correct, and how we communicate between policymakers and the development community is something that we need to look at in order for them to really understand how to better enact supply and how to manage some of the requirements from a development charge or a taxation standpoint that Canada needs from housing.
Thank you very much, Peter. And now a question for Peter Gilgan. Do you have any suggestions or strategies for helping first-time buyers gain access to housing?
Well, it's certainly a tough situation for young people today. when I meet a couple, let's say they're 30 years old, they're both university educated, they maybe have a young child or are planning a family, and they're not in a house yet, I feel terrible about that. They both got jobs, they're both working hard, they should be able to buy a home. So I guess the first thing I would say is, first of all, buy something, get in the market, get whatever you can to get in that market, get started. Your expectations might, your ability to buy might not be equal to what you'd like to buy, but if you can buy anything, buy it. I think there's a role that government could play as well. And referring back to that amount of taxation that's in a new house, certainly there have been policies in the past, both at the federal and the provincial level, that have allowed first-time buyers, legitimate first-time home buyers, some form of grant forgiveness, some form of taxation payback should they stay in the house for a certain period of time and so forth, that could help them with that down payment. There are cases where some form of shared equity program might also be applicable. We have a small program that we've launched that in some cases certain buyers might find is the key to unlocking their ability to buy a home. But I'm not suggesting that that's suitable for everyone at all, but it might work in a few cases. I guess last but not least, you're going to be prepared to suffer for a while. We all did when we bought our first house. I know I sure did. And soon enough after we bought it and got going, it seemed to be more affordable than was feared.
Thank you, Peter. And for you, Peter Politis, the same question. Are there any suggestions or strategies or potential government policies you could envisage that would help first-time buyers gain access to housing?
Yeah, I mean, I think, and I'm not saying this because we're in the development space, I think it's important to try to drive as much first-time buyers into the new home, whether it's new townhomes, semi-detached, detached condos, in the new housing market across Canada for a couple of reasons. We have a supply issue that exists and has existed and will continue to exist, even regardless of what policy changes we make in the short term. If you add more buyers to the same limited supply pool on the resale market, you're kind of in a sort of way adding more sharks to the water to further put a strain on pricing. So if we can create some government incentive programs, like Peter Gilgan mentioned, that would allow real legitimate first-time buyers to come in and access new housing, I think that to me is probably the easiest short-term fix of getting more people into a house. The trouble isn't somebody going to a house and being able to move to another house. The trouble for them is to get into the housing market. And if you're getting into the resale housing market, all you're doing is taking away one of the limited supply units that we have. So not that there isn't a limited supply of new housing as well, but getting them into building new houses creates jobs, creates further taxes, helps pay for some of these programs that we're hoping these first-time buyers get involved with. And it's very important that you very much look broadly as to where you might want to buy a home or a condo or whatever you may get into, because waiting for that desired specific neighborhood or that one house on that one corner that you think is ideal for you, the housing market over time can run away from people because incomes aren't necessarily keeping up with housing growth because of the supply demand issues that we're having. So the desire to own something should be much higher than the desire to own something very specific as a first-time buyer. And I think that's a really important key for families and for young people and for anyone looking to buy a house really focuses on, because once you're in the housing market, it's a lot easier to move either laterally or up or down in the housing market. Getting into it is really the problem. And that's where these government programs might help offset some of the down payment required, because at these interest rates, and even if interest rates go up, right now, if you're on a fixed year, 5-year fix of 1.75, 1.85, 1.92%, something like 70 or 75% of your payment is going towards equity payment, principal repayment in the house. So while it's consuming a large portion of our income, even without asset inflation, you're hoping that a large portion of your income is de facto going to savings, which is increasing the net worth and the equity we have in the country and in our homes. And I think that's something that's very important, the buildup of equity, because the buildup of equity allows you to do other things, whether it's borrow or invest in your businesses or do other things that you might need to do, reinvest into your home. It drives the economy, the ability for people to get into houses and be able to go ahead and build up equity in their houses.
Yeah. So I'd like to say that generally we have to try and align all levels of government with a common theme, and that's to decide whether or not housing is a good thing for the population at large. And if it is, then we have to declare war on affordability. And all three levels of government need to be involved in that. And it's often so it comes down to agreeing on processing times. I think what Peter P. said is exactly correct, that there's such a high level of mistrust, frankly, between the industry and government regulators and bureaucrats that we always seem to be speaking only, it's perceived that we're always speaking only in our own self-interest. And while we need to make a profit and all those good things, we also have regard for our customer. And there's just such a disconnect between the different levels of government. How certain policies are implemented, how they're used sometimes, I personally find rather offensive. I'll give an example, might be the cash and lieu parkland situation, where sometimes it's left to the discretion of the municipalities as to whether they want cash and lieu or an actual park. And in some of the really intensive development sites, where they're small sites, if a municipality wants to block the development of residential on that site, they'll say, we want a park, which precludes there being a viable building site left in the community or on the property. That's using a policy as a weapon that it wasn't really intended for. These transit nodes, or as we've referred to today, major transit station areas. There should be, when the province declares a site like that, there should be an as of right minimum zoning in order to get on. Like, the intention is, great, we're going to build this transit node, we're going to invest this money in transit so we can create a lot of housing. And then someone gets in the way and says, well, let's push the heights down, let's create less density. So the intended outcome is never achieved, because there's too much, let's say, local interest at that time. It says, well, we don't want that high building here. Well, where the heck are you going to put it? Where, we cast our die with smart growth 20 years ago, where we said we're not going to have urban sprawl, and we're going to promote growth within the city, and with better transit systems and more compact development. Well, let's decide which pony we're on, and let's ride that pony. We can't do neither, and that seems to be a lot of what we're doing right now. There's many other areas, employment conversion, the difficulties converting employment land to residential, where it's appropriate. The inclusionary zoning issue, the intention is to make sure that there's some level of affordable housing. Well intended, but the implementation of it leaves something to be desired. This isn't the place to get really technical on it, but I can assure you that it's being implemented in many cases not as was intended by the province.
I'm going to pick up on inclusionary zoning before Aleem and I ask a question or two more. But on that point, I think everyone appreciates what the goal is. The goal is to try and embed in approvals more affordable housing in each approval. And I think the challenge that the industry has is that it's not beneficial to consumers if that cost is not funded some way. It ends up having to be passed on to the consumers. And so it actually, as you say, it's an unintended consequence that actually makes affordability more challenging. Is there anything under inclusionary zoning, as you've seen it done now, that could have been done to make that policy work better and not have the damaging effect it's going to have on prices to consumers? And I open that question to both you and Peter, because we've seen the recent approval in Toronto, but this is in every city across the country.
The inclusionary zoning should include with it an as of right to more density. That's how a developer can afford to provide that inclusionary zoning, or otherwise, as you said, you just create a greater affordability problem for the 90% of folks who are looking at market housing. And the difference between affordable housing and housing that's affordable. Affordable housing is, let's say, code speak for housing that in some way there's a government contribution or an extraction from the industry to or both to pay for it. And if it has a negative effect on housing affordability broadly, we've, let's say, bit off our nose to spite our face, or whatever you want to say. We've perhaps tried to address something at the margin, but penalized the great majority, the what you often call workforce housing, or the big middle of the market, the 90+% of folks who just want to buy a home.
I don't know that you said something that I don't know is in practice correct. We want to solve a housing affordability problem. I'm not sure that the constituents within these wards and municipalities and cities are wanting to solve that problem. Whether it's high rise or whether it's urban sprawl, we very rarely come into a community where someone says, we'd love for you to put a building on this corner, and we'd love for you to build more houses. We've seen situations when people are against urban sprawl and a piece of land that we want to develop, that we have rights to develop on, and they're saying there shouldn't be more urban sprawl. But that person bought a house from urban sprawl 5 years ago. Now they have a house. Now no one else can have a house. So, and these are the people who vote for these politicians. So maybe we want to solve the problem, but it doesn't seem like the constituents within these cities, municipalities, which therefore makes the politicians within there, obviously because they're the ones who are being voted on, listen to their constituents and are not supportive. And then when they try to create policy issues to help solve affordability, like inclusionary zoning, said very bluntly, inclusionary zoning is a housing tax that I don't think the consumers can afford on everybody else. Because I am 100% sure that there's a formula and a ratio that says for every square foot of inclusionary of affordable housing you provide, you get this much more density. It becomes viable. You get more density amongst these transit areas. Now that I'm seeing inclusionary zoning come in, that is creating viability issues. Now the opposite is happening. My organization is looking for higher density stuff away from these transit nodes, which is exactly where they wanted us to put development. So now capital is going to go where it makes most sense for capital to go. We're looking outside of these areas. Not to mention the inclusionary zoning doesn't even account for rental replacement that's on some of these properties. So as it is today in major cities, you're having to replace some of the rental units that are on there at these affordable rental prices in new buildings. So it's already a drag on the ability to make these viable. Those requirements plus inclusionary zoning in many cases is either going to eliminate housing, make it much more affordable for somebody else who's buying, but it's not going to create a solve for the affordability issue. It's, in fact, in my view, proliferating the issue.
Thanks, Peter. I'll take it as a positive that there's something probably that can be done to make inclusionary zoning work. Unfortunately, it sounds like the approvals we're seeing now are not conducive to affordability, and there'll be more to come on that, I'm sure. I think, Aleem, you have another question, and I'll follow you with mine.
Yeah, and just to build on the challenges we're facing for affordability, we are currently, and this question goes to Peter Gilgan, we're currently hearing of rising material costs and a shortage of skilled trades and labor. What are your thoughts on these challenges and how best we can address them?
Well, so, rising material costs, that tends to come and go a little bit. We've all seen the lumber spike, 400% spike in lumber, and then it came back down, etc. There's the general inflation issues, and there's general transportation issues for materials that come from offshore that are contributing to price increases right now. And those things will ebb and flow, as our economist had mentioned, earlier in his presentation. However, I think the fundamental issue is the skilled labor issue. And the lack of skilled labor issue has a huge impact on the cost of building the house, and as importantly, the timeline that it takes to build that house. Time is money. And when you've got the property under construction, and it takes all across our business in Canada and the United States, our timelines are lengthening substantially. And it's at a time, of course, in the investment cycle on that house or condo building, whatever, where we've got a lot of money. We owe the damn Bank of Montreal a bunch of dough, and we've got to pay all that interest, et cetera, and we've got to get a return on our capital. So it's the worst time possible for the cycle of turning, as I call it, turning dirt into cash. It's the worst time for it to slow down, and it's happening all across our business in Canada and the United States. An immigration policy that gave significant points to someone who brings into this country a skilled labor talent would go a huge way toward creating a better supply of available labor and skilled labor that can do things more efficiently. On a small home in a development, a skilled carpentry crew a decade or 2 decades ago would build that house, the frame of that house up in about a week to 10 days. Now we're looking at times that are more like a month to 6 weeks. The crews are smaller, the crews are less skilled.
Let's imagine a time and a world where we solve our policy issues for getting approvals done sooner. We solve density, inclusionary zoning, and all these things to help the supply of housing grow and meet the demand. Let's imagine that great world that we get to one day in the future that we all hope. If we don't solve the skilled labor issue, that problem cannot fully ever be solved. In fact, it can be proliferated, as Peter said, because you're getting delays and costs at the worst and most expensive possible time. Delays in delivery of the housing creates delays in people moving into new housing. They're moving from somewhere else. They're selling a house to add to the resale market. They're moving out of a rental unit to add to the rental pool to get into that new house. This is all a cause and effect circular discussion where we're seeing today, 80% of the productivity on a site is being done by 20 or 25% of the people. And we see who those people are. And in 5, 10, 15, 20 years, many of these people will be retired and will not be working anymore. And the replenishment of these skilled trades either needs to be government programs for people within the country to do that, to really incentivize people to get in there, or immigration. The truth is immigration is a much easier answer to doing that. And then where these people go, in terms of where these skilled laborers go, needs to be where the demand and the work is. And that's in some of these high growth areas in the country. So if we magically can solve every other problem without solving this problem, and you can't physically deliver the houses, you're still proliferating that affordability issue. And it's something that is probably not spoken about enough. And it's probably something that is on the least amount of policy radar that probably needs to be way higher up on the priority scale than it currently is.
And just building on that, I think this is a great indication of where public policy can align with private sector solutions. And I think both Peter, both of you are alluding to that, and I think that's something that the industry has an opportunity to help the government enhance their policies. Mike, over to you.
Thanks, Aleem. So next question really is about what you view as the future of the industry. What do you view as the most promising new innovations in new housing affordability, or generally that you've seen or your firm is embracing? I'll direct that question to Peter Gilgan first.
So, the 3D printed house is not going to happen this decade. We're certainly looking at modularization in our multifamily product. I really dream of the day when we can deliver a bathroom, for example, to site in a kit, and it's all dropped in finished as we're erecting these, particularly these sort of 6 to 12-story buildings. But I think that the big innovation really is on the operating affordability of the house. And I mean affordability, financial affordability, but also environmental affordability. We're seeing in my firm in particular a huge emphasis on addressing our environmental impact, and we're introducing a lot of programs. We have a lot of communities now in the Metro Toronto area where we're starting to put geothermal in as a we have a goal to in the not too distant future have all of our homes net zero ready. We're not there yet, but that's where we're heading. And I think that affordability has more than one meaning. As I said, there's the financial part of it, and can the environment support new housing? That's this decade, we're going to see a lot of movement there, as we've seen in the automotive industry. I think it's coming in the housing industry, and I'm really excited about it myself. It's something that my company and my family are very much in favor of, and we're hoping to be real leaders in that space in terms of reducing the environmental impact of the operating costs of the home, and also the environmental impact of the building of the home in the first instance, which is a little more difficult to get at, but we're chipping away at that quite vigorously.
Thank you, Peter. Same question for you, Peter Politis.
Yeah, we have something very specific that organizationally at Greybrook we've been involved with. It's become a lot more, I would say, top of mind for a lot of people since the pandemic. But we're involved with a company called Delos Living and well certification. So a lot of what Peter talked about, it is the environmental impact of building houses and how that could, the manufacturing of those houses. One of the things that we're spending a lot of time focusing on top of those things is the person's well-being inside of the house. And what I mean by something like that is we have well certifications for air filtration, water filtration, circadian lighting. There's a 100-point system of how to create a better, more well-certified house. And a lot of people who are living in condominiums are now starting to ask, what is the air that I'm breathing, and where's the water coming from, and how do all those things affect? We were fortunate enough to have Scotiabank well certify their building. We have a lot of the major banks, including BMO, who are doing well certifications across offices, across their branches. We have grocery stores that are doing these things because people are much more aware of the air they're breathing, the water they're drinking, the environment that they're living in. So think about it like the LEED certification that we all know for office buildings, but a well certification stage. And that has a 100-point system that varies depending on who you're doing, what you are. And delivering this, anything from single family housing, think about townhouses, we're sharing walls, but we're also sharing other things that we may inadvertently not be thinking about. And now more than ever, it's become top of mind to give people the comfort that they're living in a well-certified, healthy home, and how all that evolves. And that's something that we think is a big focus on us, not just because of the pandemic, but going forward, it's something we want to focus on, also making the people healthier living in the places that we build.
Thank you very much, Peter. Most of our conversation up until now has been focused on market housing, and the vast majority, as Peter Gilgan pointed out early on, of home buyers are in fact paying market prices, and that's 90% of demand in the marketplace. But there's certainly a percentage of folks out there who are priced out of the market under almost any circumstances. I'm going to ask if either of your firms or yourselves have thought of any options the industry could put forward working with governments that might offer access to affordable housing. And I know inclusionary zoning as it's designed now didn't get high marks from us earlier in the conversation, but maybe a modified version of that, or maybe any other ideas you can think of that the industry could bring forward that would improve access for those who are marginalized and outside of the home buying realm as it is now. I'll offer that up to Peter Gilgan first.
So happy to take a swing at that, Mike. And I'm going to circle back to earlier in our conversation to start and then lead into a more direct answer. There needs to be the peace pipe smoked between industry and government. There needs to be serious, sit down, credible conversations where industry is given some credit as being credible, truthful, and knowledgeable about what they're speaking of. That's not happening. If we could get there, the reference earlier to Jennifer Keesmaat saying, oh, my goodness, I had no idea. If they could have an idea, if the senior bureaucrats, senior politicians could understand that with that, we may know what the heck we're speaking of, and join us in a cooperative effort to move things along, to get things done and not just talk about stuff. So, for example, Build Toronto has, I believe, 11 sites that they're saying we'll designate these sites as being for affordable, not non-market priced housing, and whatever the terms are, subsidized housing, whatever you want to call it. So the government is willing to, have that land contribute to solving the affordability issue for the marginalized folks. Those sites have been around for 2 or 3 years now. No one has apparently, I understand, no one has gone to contract in any of the sites. They're still dealing in bureaucratic negotiation. We're not involved in it. There's no self-interest or anything here. Like, if there was a war, we'd have lost it. And there is a war, and we're losing it every day because we're not treating it as seriously as it needs to be. We're too tied up in bureaucratic process and not getting things done.
Thanks, Peter. I'll give the other Peter a chance to answer the same question.
Yeah, I mean, I will re-echo and ring the alarm bell, just like Peter Gilgan just did, on the need for there to be communication and trust between the private sector and the government. But I'm gonna use a very specific example, because affordability can be tackled at 10 different points in the cycle, at 10 different parts of the process, all of which will have an impact. But saying something very specifically, if it takes me 1 year to take something through an approval cycle in a high density market like the GTA for a condo or other places of Toronto, and it takes me 3 years to do that, a margin on cost that is financeable by the banks, in order a minimum margin on that development needs to be hit, or banks like BMO or any other bank will not give us a loan. If you keep the margin on cost identical, meaning that Forget about capital earning the same return or a higher return for risk. It's earning a less of a return, but you keep the margin on cost, which we need from the bank to get financed, exactly the same. Housing prices go up. So for every time the city gets a delay, I'll have the meeting next month, 2 years from now. My Ontario Land Tribunal case is 12 months from now, and my decision is 18 months from now. That is costing the consumer money. Full stop. I was speaking to somebody at the city, and I don't want to be quoted on this being exactly correct, it's secondhand information, but there's greater than 100 open planning positions within the city of Toronto today. How can we make housing more affordable? We can't process applications. Forget about us making the same amount of money or the money we need to make for the risk. Leave that aside. Making a lesser return on your capital, but a margin that will allow one of the 5 big banks of Canada to give us a construction loan is automatically more expensive every day it takes in order to do that. Construction costs are increasing. Taxes keep getting paid. Requirement. All those things happen. So think about it that everyone can do their part. It's kind of like saving the planet. I can bend down, pick up this can, and recycle it. Every single person in the process needs to have accountability and responsibility at every level. It's us in the private sector, it's consultants, it's the city, it's the construction trades, it's immigration. This is not a problem that can be solved by one person, thing, or organization. Everybody needs to pitch in order to solve this affordability issue. And I have a very common saying around the office: we don't make money when we sell a house or a condo. We make money when somebody closes on a house or a condo, which means that they need to deliver it, they need people to close, they need people to afford it, they need people to pay their mortgage and get financing from the bank. There's lots of organizations that need to be involved in order for all this to work. And to look at whether it's the private sector or just government policy or very specific levels of government say, you need to fix it, we all need to fix it. And the sooner we get on the same page, sit there and say, we're all responsible and we all have to come to the solution and we all need to do that, then we have something to really talk about.
Thank you very much, Peter Politis, and thank you very much, Peter Gilgan, for those guiding comments on our housing markets and that positive ending note really about the importance of having a housing strategy that is a collaboration between industry and government and consumers at all 3 levels of government. I think we'd all agree. That brings me to our conclusion. And on behalf of BMO, and more particularly the Ignite Conference, for whom it's our honor to host this session, thank you for joining us. And thank you again to our guest speakers for leading us in a great discussion about the housing industry. We hope that you enjoyed it. We at BMO want you to know we're thinking of you, your families, and your organizations. We're here to help. We've been through uncertain times over our more than 200-year history as a bank and as a country, and yet we have a strong capital position and we're both well prepared and focused on serving our clients. This concludes our session. Thank you, be safe, and take care.